I've managed over $150 million as a hedge fund manager. I've also traded a small private account from my kitchen table. Same markets, completely different game. And the difference was never skill. It's two things the institutions have that you don't. I'm going to show you both, and by the end of this video, you can have one of them. Here's the first one. You're not looking at the same market they are. You open a chart, you see a line going up and down. Maybe some candles, maybe an indicator on top. That line is the past. It's what already happened. And you can see it here on a typical candlestick chart. History, not the future. An institutional desk looks at something else. They look at the orders sitting in the market right now. Who wants to buy, who wants to sell, at what price, in what size. They see the intention before it becomes a candle. And here's the part that costs private traders the most money. Your stop loss is part of the data. It's not hidden. It's sitting in the book like everything else. And there are algorithms whose entire job is to find where a lot of orders are placed. You call it bad luck. You say the market went against you and then turned around. It didn't go against you. It came looking for you. I started trading when I was 13 years old. I left school before my final exams because I was already making money in the markets. In 2004, I went to China. I built a fund there, and at the peak I was managing over $156 million. Then it stopped. I was arrested. I spent 7 years and 7 months in Chinese prison in Dongguan. Well, let me tell you the story. You know, when you get arrested. My company in China, I managed $156 million. I had a team of 30 traders and analysts in my firm in Hong Kong and Shenzhen. And if you are quite successful in a certain niche, you immediately get into trouble. So they want to take away your business and they want to use that niche for themselves. So I got arrested and I spent 3.5 years in a Chinese detention center in Shenzhen, and I was awaiting my trial and my sentencing. And that became 8 years, and I totally spent 7 years and 7 months. I got released in December 2018. I didn't know what an iPhone was. I had missed a lot of it, yeah. But the markets, like I learned how to trade, were still the same. So I went back into business. In 2019, I found something that did not exist when I was managing institutional money. Software that shows you the order book in real time. Liquidity, resting orders, algorithmic activity, everything visible. When I was running the fund, the only way to get that information was to call a banker and ask him where the hotspots were. Now, and you can see on my screen, it's available for everyone and it can be yours if you know what to look for. I've been documenting my trades publicly ever since. Every day, E-mini, Nasdaq, gold, crude oil, all wins, all losses that I'm taking available in my live tradings. The method that I'm using is quite simple. You know, we can call it liquidity method. But the market has 4 points, and these are never going to change. We have a price, we have a volume, we have a timestamp. These are the historical information in the market. You can see it very clearly on a candlestick chart like this one. But if you want to know the full size and the depth of the market, you must look at liquidity. And this is what we can see here. We can see where are buy limit orders. We can see where are sell limit orders. Everything green is buy limit, everything red is sell limit. Then we get further information. For example, if you see the blue lines, these are so-called iceberg orders. That means traders placing their order here, but we don't know how big the order actually is. But we know we have huge buying liquidity here. Tricky setups, no indicators, no certain patterns, simply to see where is liquidity here. And then you can determine where people want to buy and where they want to sell. Large clusters of resting orders, these are magnets. Yeah, we can see it here, everything what is red. It attracts a price. Same like here. We see the red line. It means a lot of resting liquidities here. Prices tend to go there. Algorithms are coming and going to sell. Yeah. Then we see the blue lines here. We can see the market is touching these lines because there's huge liquidity behind it, which we cannot see in the order book, but we know it is there. Then the next thing what we have to look at is when is the liquidity being absorbed. Yeah, we call it absorption. For example, here we can see this red liquidity. The liquidity was absorbed, the market took it on, and the downwards trend could continue. Then we see the other resting orders here, here. Market went to these orders and simply took the liquidity until there is no more interest in this case. And we can see more and more buyers are coming into the market. So what we can assume right now is that we have an end of this trend. So we could actually start to place an order here and see that we might get to new liquidity levels that are a lot higher in this area. So let's see if we can catch a trade here in real time. If we really can take all the stops here below, yeah, that would be a nice entry point. And then, well, it's the end of this trend and market may turn around into another direction. To understand these four things, it is really essential. These are the basics that you need to understand how to make money and actually how markets are working. If you do not have this knowledge about the simplicity of the auction theory that are markets based on, you will simply fail. So, and this actually brings me also to the second thing, what most of the traders don't know. They are good at a lot of things. They can tell you everything about indicators, about patterns in the market, and they still don't make money. Yeah? Not because the method fails, because the account is too small to matter and it's their own money. If you have too small size on your account, how can you make a living? You have to take risks that you cannot afford. And if you take too big risks, you're going to fail. It doesn't matter if you're right or wrong. You simply have to make a living from trading. As I started trading, it was quite difficult for me to get actually my foot into that business. I did not have the money to make a living from that. I inherited a small amount so I could start trading the stock markets. And then, well, during the 90s, I got lucky that two people discovered me and gave me the foundation and the knowledge to teach me about institutional trading. So now we have a completely different situation after 20 years, which I never had before. We have something called prop firms. Prop firms, they will look at the way how you trade. If you fulfill their risks parameter and if you make a certain amount of profit and if you do not lose too much according to their rules, then you get funded and you get a part of that profit. It was the same thing with me as I started trading during the 1990s. And it was the same for me in my investment firm in China, how I paid my traders. Then now it's available for everyone. And this is really unique in that industry. When I talk about prop firms, which gives you the foundation of starting a career in that industry, I am working together closely with IQ Capital as a partner. They can give you a good entry point at a fair price to get funded and start your career as a trader. I am a partner at IQ Capital. They are a proprietary trading firm, which means they offer you money and you can trade it and you get a share of the profit. The first thing that you have to do is you pass an evaluation, you prove to them that you can trade within the risk rules, then you get funded. And if you continue to trade in that way, you will get a payout. And I'll be honest with you about the numbers because I'd rather you hear it from me. Most people who start a challenge do not pass it. That's not a marketing line, that's the reality of this industry. And any firm that tells you otherwise is selling you something. The three reasons people fail have nothing to do with strategy. They size for a demo account instead for a drawdown rule. They have no plan for their first losing day and they trade the challenge instead of trading the market. If you've never traded consistently on a live account, don't start here. Learn the method first. My channel is free. Everything I just show you is documented there daily. But if you can already trade and the only thing missing is capital, the link is in the description. You get funded. You should know that I earn a commission if you sign up through it. I'm telling you that because I'd rather you trust me in 2 years than convert you today. Trading is risky. Most people lose money. Nothing I've said is a promise that you will make any of it. Trading is your own responsibility and you have to take action for yourself. What I can tell you is what changed for me. I stopped guessing at charts. I stopped risking money I couldn't afford to lose. That's the point if you have not enough capital. Both of those are available to you now. That took me 30 years and 8 of them I'd rather not repeat. Chinese prison. So you can find all the links in the description. I will be back tomorrow with a session recap, same as every day.